2022 has tested the stamina of investors, and it's not over yet. What history tells us about where we've been this year and where we're going in this week's Fastest 4 Minutes in Finance. Hello again, and thanks for taking time to check out the Fastest 4 every week. This week, a reality check. If you've hung on as an investor through the roller coaster ride of 2022, congratulations. It's been tough. As we record this, the S&P 500 is down more than 17% since January 1st. It has been tempting to jump off the ship as it seems to be sinking. And more than that, LPL research tells us 2022 has been one of the most volatile years on record. If you're watching this, take a look at this chart. It highlights the highest frequency of large intraday swings. Now, what does that mean? Well, it's looking at every trading day of the year back to 1982 and measuring the percentage of those days in which the S&P 500 moved more than 1% in either direction during a single day. 2022 is there at the far right, and so far this year, 1% swings have occurred in 87.3% of trading days. It's up there with 2002 and 2008. Both really bad years for the market. Now, if you stretch the data out to measure weekly returns of 1% or more, either positive or negative, there have been 27 of them, and we're only in September. 18 of those 27 have been negative. If we continue this pace, 2022 would have the most down weeks of 1% or more since the Great Depression. Now, you have to ask yourself, is that reality? Should the market be behaving like we're in the middle of a depression or the great financial crisis or even the dot-com bubble burst? Well, the LPL research team says no. They still see the risk of a mild recession as 50-50 in 2023. That's, of course, assuming the trajectory we are on. Inflation may have peaked. Unemployment is inching up. Earnings are still solid, although slowing. All components that would make the Federal Reserve's goal of a soft landing for the economy still in play. The market may be preparing for the worst, and if we don't get that, we may see some strong gains to end the year. However, it's important to remember September here. Looking at another chart from LPL Research, September is the only month on the calendar in which the S&P 500 returns have been negative in the past 10 years, the past 20 years, in a midterm election year, and even all the way back to 1950 on average. But look at the final 3 months. The S&P 500 has been up in every one of those same time frames on an average and up big in a midterm election year like we are in this year. History may not repeat itself in 2022, but the data clearly indicates that the severe downturn has been an overreaction to this point. And if the data continues to trend the same way or even improve, we could see a big bounce by the end of the year. Thanks for joining us.